Apes and apettes, welcome back to the channel. AMC is having yet again another very strong day, currently up about 6%, and we broke above $20 per share pretty easily today. So if we close above $20, that is looking exceptionally bullish. But we're going to talk about the technical breakout that we are currently in, as well as yet again another very bullish day as far as institutional option order flows for AMC stock. We're also obviously going to be going over the inflation numbers that came out today and why this could set the trajectory for another bullish rally. And then we're going to go over all of the typical data that we do go over here in these videos. So drop that like on the video, consider subscribing to the channel, as well as let me know in the comment section, what do you guys think about this rally? Your portfolio should be looking a little more green than not today. So diving straight into this, we could see AMC hit a high of $20.96 per share. We were up almost 10%. So the fact we're holding up so good is definitely a good thing. And the SPY and AMC's charts look somewhat similar. Not exactly the same, but somewhat similar. So we are following the SPY to a certain extent. And the fact that CPI came out today and you're not having a super bearish reaction, the SPY is down about 0.33%. We opened up down 1.5% on the SPY, 2% on the NASDAQ, but we quickly recovered all of that pretty much right as the bell did ring. It was pretty much straight up. So why I think this could set the path for the next rally is because we don't have any more major data that is going to move the markets until March 10th CPI readings, and then March 16th that is going to be Fed Jerome Powell, the FOMC minutes, and you get the speech and you get the report, and that's what is going to move the markets a lot depending on what they do then. But we have this time gap where there's not too much actually going on in the meantime. So it could set the path and set the trajectory for a bullish rally, since earnings are coming out to be better than a lot of people had expected. I believe 80% of companies have beat analyst expectations so far on earnings. So that's really the thesis here. I think you have a green light necessarily per se for the next couple of weeks. Obviously, it's going to be a little bit choppy depending on the Russia-Ukraine situation. That could definitely start to affect the markets. The Iran situation as well, if that does start to develop, that could also hurt the markets, but we're not seeing any clear signs of that so far. As far as the inflation report, this says inflation surges 7.5% on an annual basis, even more than expected, and the highest since 1982. So bad news apparently is good news. I mean, the markets really don't care. They're saying fuck inflation. We don't care. We're buying the dip. So looks good right there, but still very bad inflation numbers. If the CPI report on March 10th comes in lower than 7.5%, which the government is calling for, that is going to be a very bullish thing. But it says the key points: the consumer price index for all items rose 0.6% in January, driving up annual inflation by 7.5%. That marked the biggest gain since February 1982 and was even higher than the Wall Street estimate. Core inflation rose 6%, which also was a notch above expectations. Real earnings for workers increased just 0.1% on the month when accounting for inflation. Weekly jobless claims declined to 223,000, below the 230,000 estimate. I don't think the jobless claims hardly beating estimates is the reason the markets are rebounding today. I think more than likely a lot of the bad news was already priced in, but you guys can see this chart. This is inflation, and it is not too pretty at all. And what you'll notice is that every time CPI goes above 5%, you see a recession. And that is these gray bars right here. Above 5% in 1981 and recession. Above 5% October 9, what is that? 1990 in October, recession. Right here, didn't quite break above 5% in 2001, recession. broke over 5% in 2008, recession. And then obviously the COVID pandemic was a little bit different. Now we're probably headed for a recession, and I think the markets don't fully understand this data yet. So I think the long-term trajectory, by the end of the year, we're probably going to see another crash. And that's what's going to pave the way for the MOASS. Because like I say all the time, you have to think about it like this. A short seller, they know stocks go up, and they can go up a lot, and then they ultimately come right back down 9 times out of 10. So if that happens, and that will ultimately happen with AMC, the shorts are going to hold on as long as possible. You're going to get some small guys that will cover when liquidity is everywhere over the past 2 years. That's why we've never seen a short squeeze with AMC stock. But what happens when liquidity is restricted and the markets go down? More hedge funds have to start covering once the price goes up. And then even the guys that are in good shape that have short positions on AMC, plenty of cash available, the price just keeps going up. So their margin calls get bigger and bigger and bigger until they ultimately have to cover as well. So that's the thesis around the MOASS. And that, to break it down in a nutshell, is why the market's going down is actually a bullish thing for AMC. But I think that is in the longer term sense and really throughout the rest of this year. The second half of 2022 is where I would put my estimate on that. Now, the option flow for AMC today, 46% positive, which is a lot higher than what we typically do see. And we're seeing 30 orders totaling $16.78 million for the day so far. Yesterday, as you guys do know, we were at 77% positive order value. And over the last week, even with this huge bullish activity yesterday, we're still only at 41% positive order value. So you're still seeing a lot of negative trades overall, but not nearly as much as we were seeing just a week or two ago. Something that I do want to point out, though, is you're seeing a lot of very far out of the money short-term calls being placed by institutional investors. A May 20th $50 call for $53,000. You're seeing, let's see, another $50 call, $26 call. There's some, see, 110 strike. The 110 strike for January 2023, $33,000 trade, $80 call for January 2023 as well, and that is for about $35,000. A $60 call right there. So you guys get the idea. A lot of out of the money, super far out of the money calls that have been being placed, especially yesterday on AMC stock. So keep that in mind. It's definitely different from what we have been seeing. Whereas most of the time we see a lot of puts that are being placed that are in the money to cause that artificial shorting. So that's probably why we did start, to bounce over the last couple of days, because of all of the bullish option flows. And as far as the share utilization, like I said on the live stream last night, it makes sense when you're seeing a lot of bullish activity, a lot of good news for AMC. The institutions that own the stock probably don't want to lend out the stock as much if they can get a 10% gain on any given day. Why lend it out for 2 to 4%? You just wouldn't do that. So that's probably why the share utilization is jumping up so much. And that is ultimately a bullish sign in my opinion. And like a lot of people have pointed out, the whole meme stock sector has seen the share utilization jumping close to, if not at 100%. So that's looking good. As far as the short interest of free float, 21.67%. Cost to borrow max at 2.4%. We did get the exchange reported short interest data that did come out yesterday as well, and that was at 21%. That is the largest print you have seen since June. So we're at record levels since June, and I think that is setting us up for another big rally. Days to cover at 2.53 days. So looking good in that aspect. As far as the 13F filings, you are seeing a lot of bullish activity from the filings that are coming out today, like Citigroup increasing their position by 63%, 26% increase right there, 18%, 17%, 77%, 68%. So you're definitely seeing more bullish filings than not coming out over the past 2 days. So also looking good. The max pain is sitting at $17.50 per share. On my top end range of my price target by the end of the week, just to reiterate, my price target was $16.50 to $17.50. So if we're anywhere in that range, I think you could classify this week as bullish no matter what happens, but we're definitely way past 1750 at the current moment, sitting over $20 per share. And as far as the Stonko tracker data, about 74,000 calls that are in the money, 77,000 calls that are out of the money. So if you do see another big bounce tomorrow, which looks likely because the big fear catalyst for this week is over, and that was the CPI data, you could see a big rally in the markets tomorrow. You could see a lot of people coming in and buying the dip, and that would definitely help AMC and the options. 77,000, a decent amount that are out of the money. If they do start to go into the money in a substantial way, it could also cause a rally. But on the put side, you're only seeing 3,800 puts that are in the money, so not very many at all. So you're not going to see a lot of buying power coming in from the market makers on the put side, and 110,000 puts that are out of the money. So that's pretty much going to be all for this video. Let's take a brief look at the technicals on the daily candlestick chart. And you guys can see we're in this technical breakout right now. We have seen a firm reversal. If you do pull up the moving averages, the next big level of resistance is going to be about $23 per share. But even more important, I think, is the Bollinger Bands. And this 20-day simple moving average was at $17.09 per share. So it looks like we're certainly going to close over that by tomorrow, and that is an indication of a lot of bullish sentiment heading into the stock. The volume is actually increasing as well already for today at 59 million shares, and we're a little bit over 2 hours into trading, so it looks like it's going to be another big volume day today. Yesterday's volume was 76 million shares. The day before that was 51 million. So a lot of people that are coming in, I think a lot of FOMO that is heading into the stock because a lot of people have sold out, believe that or not. And if you see the stock going up 6 to 10% or even close to 20% on any given day, those are the people that are now buying back into the stock. But the shorts are not covering. Like you see right here, return shares, and this was as of 2 days ago. So this was really this first pop right here. Shorts did not cover. So tomorrow, that's what I really want to see because we went up 15%. So I want to see what the return shares for tomorrow do start to look like if some shorts did cover on those short positions. So all of this looking good in my personal opinion, definitely better than I expected this week to be. So hit that like button for me, subscribe to the channel, comment down below if you guys found education, if not simply entertainment out of this video. If you guys want access to all of my trades in real time, link for the private trading community down below in the pinned comment, as well as get yourself some free stock with Mumu, Weeble, and Public. Thank you guys for watching. Got to tend to my daughter now, so you guys enjoy the rest of your day, and I will see you in the next one.